So you want to analyze the stock market. Well, that's quite an interesting thought, because just the moment when you actually analyze the stock market and you think you've got it right, it always does the opposite, doesn't it? Well, it always does what you don't think it's going to do. And this is why I refer to analyzing the stock market as quite a difficult thing to do and quite a tricky thing to do. So many people think they've got this down to a T. So many people think that analyzing the stock market is as simple as waiting for the jobs figures to come out on Thursday or Friday or whenever, or the CPI data or some kind of inflation figure. And these monetarist guys are going to give you the figures, and you're going to, it's going to go up or it's going to go down, and whatever the case. Hey, it's Rob Guilty, it's logical trading. Trading is risky. 80% of traders lose money, and you probably will too. So if you don't like losing money, don't trade. But anyway, analyzing the stock market is all about, effectively, people think it's about having the knowledge to understand where the money is flowing, when inflation's going up, when CPI data is doing this, that, or the other. But if you think about it, and if you look at the macro picture, the big picture, for the last 100 years, the S&P and the market and the Wall Street, whatever, has been going up, right? The market, the stock market, has been going in a northerly direction in general. And we've had one or two setbacks in between, a few corrections, and that's what we're about. We're about the corrections. If you want to analyze the stock market, the easiest way to do it is to buy low and sell high. Would you actually like your own trading bot? Pop down to the description below and you'll find your trading bot there. Just click on it and go and get it for yourself and let it do all the trading for you automated. Hey, let's get on with it. So I have a very, very simple way of trading stocks, and that is I simply trade support and resistance, or I simply trade supply and demand, and that's as easy as it gets. And today I'm going to show you what that's about. What I do mostly is manage my risk. That's the most important thing, managing your risk. Okay, so look at a trade as how much it's going to cost you. That's your risk. That's what you're going to pay. End of story. Then walk away. That's it. Okay, so if you're risking $50, risk that. That's it. End of story. Okay, take it as if the trade loses, you've lost that. That's fine. If the trade wins, yippee, yippee-ki-yay, brilliant stuff. Okay, but how do we do that? What is support and what is resistance, and how do you draw these lines? Okay, so we all know support is down at the bottom, and it's holding the price up. So it's when you're buying the price low, and we all know that resistance is when it's right at the top and you're selling the price high. Now, these areas don't have to be perfect. They do not have to be exact. So that's why we draw blockies or rectangles or whatever you want to call them. Okay. Trend lines also work as resistance and support. You can draw trends. So when it comes back down into that trend, that can be an area of confidence for you. So then you've got more than one indicator giving you an idea of what's going on. Now, if you're going to draw an area of resistance or support, it simply needs to have 3 touches for it to be a good one, to be decent. So if it's got 3 touches along the way, then you've got a good support resistance area. It's got 1 or 2 touches, that's not a support or resistance. Okay, so that's how you draw your support and resistance. Now, what I'll normally do when I'm trading a support or resistance is I'll go to the higher time frame, let's say the day, Now we're in the day. Then I'll put it on a line chart. Now line charts, the reason I do that is it's easier to see the configuration and the points. Okay. Then you draw your support or resistance area in. Once you've got it drawn in, simply go back to the candles. And once you're back in the candles, drop down to the lower time frame. And you can drop to as many lower time frames as you want. Okay. I simply go to the H4. Sometimes I'll drop to the H1, depending on the day. That will now give you your support and resistance. Now all you've got to do is trade into that support or trade into that resistance, and then look for a confirmation candle coming out of that area. Once you have that, it's very simple. You set up your stop loss, you give it an area, you give it some room, and then you set up your take profit target. But the thing with take profit is you don't have to have that set in stone. You can add to your profits, you can follow your profits, you can put trailing stops once it's very close. If it gets very close to your take profit and you're watching it, don't take profit. Move your take profit up and put a trailing stop in at that area. Okay. If it keeps on going, you make more money. If it comes back, you got out of the area you wanted to anyway. So that's how you would work with support and resistance. It's as simple as that. There is no magic trick. Why do we keep on looking for this magic trick, for this little bit of information that's going to change everything for us? Okay. We go out there, the CPI data comes out, we look at inflation, interest rates going up, interest rates going down, and this moves the markets up and down. Effectively, the money flows move the markets up and down, okay, at the end of the day. And at the end of the day, the markets just keep going up because there's such a thing as companies growing, and those companies get bigger and bigger and bigger. They make more money. They're part of Wall Street, they're part of the S&P, they're part of the NASDAQ, and therefore these companies expand, they grow, they become worth more. And on top of that, we've got inflation, which raises the monetary value of all these companies. So it goes without saying that they're not going to keep on going down, they're going to keep on going up in the long run. The trick in trading, or in day trading, is to pick those moments out when the markets are going up and down, when they're expensive and when they're cheap, when to buy, when to sell. Okay. So the trick is to use, like I do, either support and resistance or supply and demand, and buy when the markets are hitting a support and they're sort of showing a green bar and going the other way, or when they're hitting a resistance and starting to come down. It's as simple as it gets. It's not that tricky. And by the way, Merry Christmas. It's Christmas at the moment, so I hope you enjoyed a good one. I hope you had a great holiday. Let's get back to trading soon. We've had a few days off. We've had a bit of a relaxing time, and it's time to get back to work. I just wanted to point out to you that analyzing the stock market is not as simple as waiting for all this information to come out. You can analyze, even if you analyze a stock, you go out there, you got a great PE ratio, this company looks amazing, and the next day the CEO resigns and all shit hits the fan, and it goes down. It goes against you, and you think, what the hell just happened? That's how it goes. It's always going to be like that. If you've got a system in trading, stick to that system, work with that system. Remember what I always tell you, the markets can go up or they can go down. It's a 50-50. If you take that trade, there's no guarantee it's going in your direction. It's just that you have a system which gives you an edge, which tells you it might go that way. Okay, it's as simple as it gets. There is no magic trick. Guys, thanks for watching. I hope you enjoyed that. Like, comment and subscribe. Comment. Maybe follow, whatever the case. Until next time, thanks and bye.